And then make sure to take screenshot at least for 2 different time frames and send them in the off-topic chat. We need to see at least half an hour of price action before your entry and at least half an hour after that, so that we can discuss the trade fully. Not well, 144. If the risk to reward is decent, then it's totally fine. Yeah, I did have a good day. I managed some of the trades badly, and I will share with you my trades. Hit daily goal event, that's good. Okay, we have quite a few trades, so let's just start with them, and then I will explain my trades if we have time. Peter is an apple. What are you doing in apple? Apple, apple, apple. Oh, I bet you're long on it. Doesn't look like a bad long, especially on the 15-minute chart. Oops, wrong room. It's okay, Peter. You're welcome here and on every room. Hey, OG. Welcome here. If you want us to take a look at your trade, just make sure to take a screenshot and post it in the off-topic chat. And let's start with here. The first trade we have is for Ivan. I'm trying to get better at C-level entries on ABCD pattern. Please let me know your thoughts and possible areas for improvement. First entry was on a new 5-minute high. Exit should have been a new 5-minute low. I guess somewhere down there, right? But I bailed out a little bit earlier. The second entry was after the price wicked below the 5-minute chart, 9 EMA, which is here. Then got back and formed a strong bullish 1-minute candle that closed above the 50 SMA on the 1-minute chart. Entered on a new 1-minute high and the profit was 2 hours. Okay, let's take a look at these guys. This is CIT. Yeah, CIT. The price action here, it looks like so bullish, right? So bullish with no pullbacks. You can see a 3-bar play here. I wouldn't take this 3-bar play because we are having a shooting star at the high of the day. So even if it makes a new 5-minute high, I'm not playing this 3-bar play. It's just a little bit risky in my opinion. After that, we are making the pullback, right? This is the pullback. After a strong move, we're having a pullback, which gives us a possible entry right there. A possible entry somewhere around here, I guess. It will be somewhere around there. But look at this. This candle, again, it's just not giving us much hope that this thing might continue trending, right? You see that the sellers are pushing it down. It's getting pushed back down, especially that it is after a red candle. Would I be interested in it to the short side? No. The 9-moving average is down there. The move is so strong. Some might think, okay, we're having a new 5-minute low. This might be reversing. I'll try to catch a reversal. This move is already bigger than the average true range. It will just dump. It can't go any higher. That's not the way we trade. If we want to take a stock for a reversal or we want to take it for a short, we need to make sure that it is setting up for a short, right? Right here, it's still not setting up for a short. This might just be a pullback, and as long as it's holding above the 9 and the 5, it's still valid for a long setup. Those 3 candles are amazing. Look at this. Being pushed back up, being pushed back up, being pushed back up. 3 candles in a row, 15 minutes, and it's being pushed back up or showing us strength there. On the 1-minute chart, this is an amazing entry. A new 1-minute high right there. You are taking it to the long side, putting your stop loss at the low of the range. Was this good? This was perfect. If you are getting within the range, your stop loss is the low of the range. Now it's going up and it's dropping down. Should this get us scared out after the drop? No. Why is that? This is the low of the range. This is the high of the range. And after breakout, we are putting our stop loss in the middle of the range. And here we didn't have a breakout yet. The breakout happened here. So this here is not scaring me out. I'll keep holding on to it. I might have added where you added because we're having a new bounce area. In this range, when it was bouncing from the same range, so the stop loss would be somewhere there or there. Now we're having a higher low bounce area, and we could put our stop loss right there. So an add was good. If I miss this add or I'm not sure about the setup yet, I would wait for the breakout, and the moment it breaks out, I will add heavily, moving my stop loss to the half of the range, and then start taking partials all the way up. This right here would be the exit. Why is that? Anyone? Why would this be a good exit? Indecision candle. this candle is still not closed. Let's assume that this candle is still not closed. Okay, broke the range and broke half of the range. Perfect. That's it. We broke the range. It was forming an ascending triangle right here. So you're having one touch, second touch, third touch, breakout touch. From the bottom side, you're having one touch, second touch, third touch. You're having an ascending triangle forming. The ascending triangle broke up, and after breakout, we expect it to either run, pull back and then run, or run, get a little bit inside the range and then run. Right here, it did breakout, which is good. We'll definitely take some partials at the breakout. And then after the breakout, it's making a failed breakout. You're right, guys. And it's getting into the middle of the range. No need to hold this thing anymore. And now we can look at it for a short. Here we're not interested in a short. Here I'm not interested in a short. Some might say, okay, we're forming a double top. Let's take it to the short. Double top with the doji below it. Not literally. We're still above the 9 and the 5. It's still so strong. And it could make another leg up. It might actually be making an ascending triangle. No reason to bail right here yet. Right here, it is interesting to take it to the short side. I will not take it immediately right here to the short because the stop will be so wide. I'll wait for either a pullback or a continuation. Right, and that's it. ABCD pattern type 1, reverse ABCD pattern type 1, where we could take it to the short side. Sometimes they don't, sometimes they do Valerio. Sometimes they make crazy moves. But you're right. They could be tough sometimes. Which is why we can't really hold on blindly on a stock or to a stock, right? We should always keep watching it and manage it closely. Now let's take a look at what you did on Tesla. Tesla, this was a parabolic reversal. Do we like this parabolic reversal? On the 5-minute chart, I like it. We're having 1, 2 consecutive. No, this is not the one. This is the 5-minute chart. Okay, on the 5-minute chart, we're having 1, 2, 3 consecutive 5-minute candles. Is that good, guys? Yes, this is good. 3 consecutive 5-minute candles. So like that to the short side. The 1-minute chart, is this parabolic, guys? Yes, this is parabolic. Only by drawing this line right here, we can see that it is parabolic. It's not like that. Do we have a hammer at the low of the day? Yes, we have a hammer at the low of the day. Not climactic volume, but slightly increasing volume. New 1-minute high, we have it right there. Perfect. Take it to the long side. Target, biggest target, the 9 on the 5. On your risk to rewards, make sure to take some partials on the way up. How much did you exit at the 9 on the 5? B-Tang. Oh my god, that just got frozen. I'm not sure if B-Tang is here or no, but for me, this target right here would have been at least 70%. Because we are going into a parabolic reversal. We are not going into a full reversal, right? It is, but by the way, I'm not playing Candy Crush. It's automatically installed on Windows. I'm playing Fortnite. Alright. So, this is the 9 and the 5, and at the 9 and the 5, I'm bailing 70% of my position. Why is that? Because we know that the stock is weak, and the most likely which could happen, or most likely thing which could happen right here, is the stock pulling back and then continuing the downtrend. Right? This is happening a lot. So you could either exit 100% of your position at the 9 and the 5, or sometimes 70% of your position and leave 30%, because sometimes you're getting crazy moves even above the 9 and the 5. Now let's see what else we have there. Finto. Finto traded WKHS. And this was what right there? A long and a stop out and a long and a stop out? Why can't we see your entry here? It's the 1-minute chart. Oh my god, what's that timing? Okay. That's tough. That's really tough. We don't see your first entry, unfortunately, which is at 10:30. Do we see it? No, we don't. Just look at the 1-minute chart. So we definitely need to look at the 5, but let's take a look at this one. Was this long bad? And I really want to see a bigger picture. Was this today? Okay, because we can't, this when trading, this is not enough to look at. This right here, it's not enough to look at. You definitely need more price action to analyze it. And that's why I have my charts usually zoomed out. This is the way I try to trade them. And you traded it around 10:45. Now look at this. This will actually show me a lot. You see the 15-minute chart, the 1-minute chart, and now let's see what you did right there. So this is it. First of all, you are taking it to the long side at 10:30. Was it bad at 10:30? 1, 2, 3, 4. 4 consecutive candles. Do we have a parabolic move in the 1-minute chart? Let's take a look at that in the 1-minute chart. Not parabolic, to be honest, but enough extended from the 9 and the 5. And reversal candle at the low of the day. Would I take it personally? No, but if I take it, what would be my stop loss? My stop loss would be below this candle right here. Not this one. Below this candle right here. This is it. This would be my stop loss. This would be my entry, or this would be my entry. Did you take it? Yes, you did. You should have just held on to your target, okay? Then you're taking it to the long side against the 9 and the 5. This is something which you want to avoid. Then you're taking it one more time to the long side at 11:30. And let's see what we have at 11:30. This is it. So you see stock actually weak, right? It dropped down, made a reverse ABCD pattern. And look, anyone could tell me why I wouldn't take it to the long side here? Just immediately by looking at the chart, I wouldn't have taken it to the long side around here. Double top. It wasn't a double top at that moment, because when he took it to the long side, I see what he saw. I know what he saw right there. Stock is going up, consolidation, going up, pulling back, coming back up, further breakout and continuation. This looks good. I like this price action, but it depends on what you could see. Hammer on the 15-minute chart, it's also good, right, for a long, but there is a reason for me not to take it to the long side yet. 2 reasons, 3 reasons. Okay. Weak trend, okay, that's good. Okay, pay attention to the bigger picture. Look here, and then look here. Anyone? Holding view up, kind of. Okay, I will draw a line for you. Exactly. That's a deal. A resistance. Remember what we said after breakouts? What's happening after breakouts? Stocks could retest before continuation. Right? The next thing is we are weak on all the time frames. We gap down on the daily chart. When we gap down on the daily chart, what I look for is either a downtrend, a short position for a trend, or a long position for a scalp. I'm not going for an extreme reversal on stocks which gap down or stocks which are downtrending on the daily chart for a move to view up and above. Maximum to view up. 15-minute chart looks like it's trying to make a reverse ABCD pattern of the 9-moving average on the 5-minute chart. 30-minute chart did a huge move with no pullbacks yet, so a pullback would be expected. All the time frames are doing the same thing. Huge move, pullback, huge move, pullback, huge move, pullback. 5-minute chart, it did one leg down, dropped down. Around here it did the reversal, right? Like double bottom with the second bottom higher than the first one, new 15-minute high, cross of the 50 with the 9 and the 20. I would take this thing to the short, to the long around here if I want to play it, for example. But my target would be maximum view up. I will not hope that this thing will go to view up and above it. We are still below most of the moving averages, and most importantly, we're having a clear level. For me to be interested in this thing to the long side, I want to see it going to the half of the range. Why? Because if stock goes into the half of the range, it's not as weak as we thought it would be, right? Even if it breaks it a little bit, I would not take it to the long side because it's still below the half of the range and it could just do that and then drop down. Does that make sense? Because see, this is the way you traded it. You had the chart zoomed in and you didn't see the previous price action. You always need to see all the data there, especially when you are trading later on the day. Later on the day, moves are more likely to happen than earlier on the day, and that's just my personal opinion. Why is that? Because later on the day, you have a lot of information which you could rely on, which could tell you a lot. Earlier on the day, you don't have that. Okay, now let's go for the next trade. Edwin. So Edwin traded Uber. Let's see what you did there. Entry was based on the 2-minute chart. You entered at a new low after a hammer. Okay, this was a short position on Uber. Okay. Should I stop out at 10.15? 10.15, no, you should not. I'll explain why. Okay, so was this a move, a parabolic? Like right here, I could see it was parabolic, yes. I mean, drawing the line, right there, it is parabolic. Drawing the line there, it is parabolic. Right here, it's not a parabolic reversal anymore. Around here, it doesn't look like a parabolic reversal anymore. This is sort of a double top starting to form, and I would still like this trade to the short side here. Why is that? Because we're having a fake breakout. A fake breakout is one of the rules or confirmations for me trading parabolic reversals. Stock is going to the upper side. This is the first possible entry. I wouldn't take it because the 1 minute chart is so strong. Sorry, the 1 minute candle is so big, which will mess up my risk to reward. Right here, you're having a fake breakout. After the breakout, it's not running, and then it's making a new low. Reversal candle on the 2 minute chart. We're taking it to the short side. It's trying to go back, and then it's going lower. Would I exit right there? No. If the setup is valid, and I don't see any reason for it, especially look at this. 1, 2, 3, 4, 5, 6. Like no pullbacks yet at all. It's still kind of extended from the 9 and the 5. The move was parabolic, double top, fake breakout, new low. Everything I want to see in this trade is there, and this consolidation is happening while it is still far from the 9 moving average on the 5 minute chart. I'm definitely going to be concerned about this. I don't like the topping price action, but I would hold it to my max loss. This is what I'm doing. If I'm in a trade, I will try to hold it as much as I can to my max loss without exiting earlier. There the breakout happens, and this is where I wouldn't have taken a partial. Why is that? Because finally the breakout happened, and after the breakout, I would expect it to just move a little bit in my favor. Biggest partial. It was the 9 and the 5, no problem at all. Partials all the way down, and then exiting at break even. I think you handled it really well. Did I miss anyone's trade, guys? No, I didn't. Perfect. Do you have a specific order of pre-trade checklist that you go through, multiple time frames or pattern volume level 2? I build my plan for trading before the market open. Every time I'm doing that. Before the market open, I start building up my trading plan, and then what is... Okay, that's too much actually. We'll take a look at that now. And by the way... Okay, perfect. Yeah, I build my trading plan before the market open. So, Anand, what trade do you want us to review? NKLA, right? I'll definitely go through that, but remind me to do that when I am in the chat room on the microphone, because we're having a little bit of, a lot of trades here. I'm not sure if we'll be able to go through them all. If there is time, I will go through that. If not, remind me tomorrow when I'm on the microphone in the afternoon, and I will talk about that, okay? An hour or so, Andrew. So let's take a look at this trade. Traded NKLA to the long side. It is an ABCD pattern on the 5 minute chart. On the 5 minute chart, it's not an ABCD pattern, it's 3 bar play. Clear 3 bar play with nice consolidation on the 1 minute chart and a decent consolidation on the 2 minute chart. You are taking it to the long side, taking a partial there, exiting. Okay, now look at this. First trade is decent. First trade is totally decent. 3 bar play, taking it to the long side, partial and getting stopped out. Nothing wrong about that. After the breakout, stock getting into half of the range, not interested in a long anymore. Remember that. After a breakout, if the stock is getting into the range, not interested in a long until it's giving me a setup to take it to the long side. I know why you might be interested in taking it to the long side, because it was closer to the 9 and the 5 maybe, or or maybe because you thought that it will hold this support area down there. But yeah, clear bull flag on the 1 minute chart, clear 3 bar play, clear breakout. I'm losing my voice one more time. After the breakout, it's getting into the range where we're not interested in trading it to the long side anymore, unless it's going to give us at least sort of a W shape, which confirms that the stock might still be strong. When I took it the first time, could it be considered as an ABCD pattern that failed? You took it correctly the first time. but it failed, right? Which is not bad. Bull flag, ABCD patterns, I don't know, ascending triangles, what else we have there? 3-bar plays, they're eventually coming to the same thing. A move, a consolidation, and a move. So you could name it as any name you want to name it. But yeah, this was an ABCD pattern which unfortunately failed, so no need to try to force it to work out. That's the range. Look at this. This is a clear range here, right? A clear range here. A range where it's consolidating. And now it's finally breaking it out. After breaking out, it's getting into the half of the range where we're not interested in it anymore. After breakouts, we want to see retests and continuations. We don't want to see them getting inside the range. By the way, guys, this what I'm explaining right now here works on the first hour or so. After that, range is a little bit different. So it could get into the range, but the continuation could happen. Okay, so this what I'm explaining right now about the ranges and half of the ranges is just for the open. Later, those stuff are being played a little bit differently. And let's see what you sent there. So Anand traded day, key, and G. I traded this thing to the short side actually, and I'll show you my trade in this thing. So day, key, and G, you took it to the long side down there, and this is not bad. I personally wouldn't have taken it right there yet because it was still below the 9 and the 5, and we know that the 9 is just a range, right? And I see this right here. This is what I see. Clear resistance, clear resistance, clear resistance, and I see a descending triangle trying to form down. I personally wouldn't have taken it to the long side here because I would have been afraid that it will just break down. The moment that I see that the descending triangle is broken, which is here, that would have been a good place to either enter or consider it taking it to the long side. If you miss this first move, then you're having the 3-bar play forming out. Remember, guys, we don't trade the 3-bar play only because it's 3-bar play. Combine it with something, right? For example, here we can combine it with the descending triangle which failed out, a beginning move to the upper side, and then a 3-bar play which continues pushing it to the upper side. So yeah, you could have re-entered right there if you missed this first entry. This add right here, I would have avoided. Definitely never add on the way up, especially on 2 big candles, right? Or 3 consecutive candles. There will be a pullback eventually, and you don't want to get stopped out on the pullback because of some add, right? This is where you want to add after the pullback, which was amazing. Partial, 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 and then you tried one more time, and this is where we go to the ranges one more time. You see the high of the range, the low of the range, breakout, retest, long, perfect. Breakout, not retesting, getting into the range, not interested anymore, or going to hold to my original position. Let's see what I did on day, key, and G quickly. I played this thing to the short side right there. Same sort of theory, right? First of all, I'm taking it to the short side because I see that on the 15-minute chart, it's really weak. It's downtrending. This move to the upper side didn't really get me long buys on it at all because we formed the double top and I took it after it formed the double top and started dropping down. We still were within the range, right? So my stop loss was at the high. The moment we went in for the breakdown, of course, it's there, the breakdown, but I noticed that this could be the breakdown. This is the 4-bar play. Strong, weak, strong, weak. Remember, guys, I use this one on the 1-minute chart for parabolic reversals, and we talked about it. I also use it for confirmation on other plays right there. So 1, 2, 3, 4, then a little bit up, a push down, take it to the short side, stop loss, and then partial down there. Exited the rest at break even. Now let's see what Valerio did. Guys, make sure when sending screenshots to hide your account numbers, alright? And then send them. So those who send their screenshots with their account number there, just make sure to hide them. Now let's take a look at this trade. You traded day, key, and G. Actually, it will be tough. Can you, Valerio, send it one more time because it will be so small, and if I zoom it again, your account number will be visible there. So yeah, Valeria, send it one more time. And I will continue right now. Peter, let's see what Peter did. Peter traded Apple. Was this parabolic reversal app, Peter? So let's take a look at this drop. So drop, why can't I get the yellow? Give me the yellow. Drop, pull back, drop, right? Previous day close, I love that. Increasing volume closer to the low of the day, that's good. New 1 minute high, which is the entry to the long side. And look at this. You see, guys, this is the patience. Remember when we said that you leave at least a little bit for a bigger run? Some said like I'll exit all 100% of my position at the 9-moving average on the 5-minute chart. So you could do that, but you will be missing these opportunities sometimes. Long, partial, pull back, add to the position, and then partial all the way up. So instead of getting only this move to the 9 and the 5, you could get even this move, which is double it or triple it, right? That's why you always leave at least a little bit. If you leave 30% and then you can double this 30% after pullback, you'll have 60% of your original position, more than half of your original position, and you'll get a move which is bigger than the original move. This is why we want to let the runners run at least a little bit left and then add on that position. Andre, the 4-bar play, it's consistent of 4 bars. One is long, second is short, third is long, fourth is short, all around the same range, and then a breakout to the bottom side. It could be a breakout to the long side if the arrows are the opposite. Short, long, and then a breakout to the upper side. NWIG, only 3 stocks at a time, not more. Give me just 1 second, guys. Only one, and we will fix that. Let me mute this. And let's go. Yes, I do that. It's just a confirmation for any setup I want to trade. Brian C. So this is it. This is what Brian traded here. He actually texted me before, and he traded this one for an ABCD pattern on DKNG. And this is what Brian saw. He saw an A, saw a B, saw a C, getting pushed back up, took it to the long side for a D, a breakout, taking some partials and exiting down there, right? Second entry shortly after. First partial was 10% near the, let's see that, first entry, first partial 10% near the close. Pull back, look to be a solid ABCD pattern, so you add it to your position. There it is, I see that add, it's here. And then it tanked. Okay, look at this. Look at the bigger time frames. When we are trading, guys, remember we are trading of the bigger time frames, right? We're looking for a setup of the on the 5-minute chart or the 15-minute chart. We're getting entries on the 1-minute chart. We don't trade setups on the 1-minute chart. Looking at the 5-minute chart, you could see the DKNG, it was making a reverse ABCD pattern, right? Look on the 15-minute chart. On the 5-minute chart, I could see that it's making an M shape for a continuation. Eventually, it did go higher, but at this moment, it was still weak. It was below all the moving averages, below the bigger moving averages. So yeah, this wasn't an ABCD pattern. It is an ABCD pattern on the 1-minute chart, but for what? This is not set up here, right? Because of that, we don't want to force a step. You want to see a setup on a bigger time frame and take it on the 1-minute chart, or you want to see maybe another setup on the bigger time frame and the ABCD pattern supporting or just confirming your direction there. Does that make sense? Perfect. So let's see OG. Okay, not like this. It will be like this. So OG traded DKNG. Oh my god, that's a lot actually. Were you trading mainly of the 1 minute chart, Oshi? It's fine. How long have you been trading for, Oshi? No, it's okay. No worries about that. 3 months. Okay, that's not too long. That's not so long. It's totally fine. 3 months. In simulator, right? That's smart. Really good job. So, do you have any particular setup you are trading, or it's mainly price action? And are you journaling? Okay, so I recommend that you start journaling. Trust me, once you start journaling, you will see a huge improvement. I haven't been journaling for 3 months as well. My first 3 months I was trading with no journal at all. Then I just decided to give it a try, and my trading improved a lot the moment I actually start journaling. So trust me on this one, you want to start journaling and you'll see huge improvement. Now let's take a look at DKNG, the 5 minute chart, and then we'll see your trades on the 1 minute chart. We'll just put them all together like this. So this is the 5 minute chart, and I don't know, I have Yandex here. Let's get your trade above and we'll see both the time frames. Where is OG? That is your trade. Okay, let's actually do it this way. Let's try to do it this way, okay? This was all the way till 10:30. Till 10:30, where can I put you? You'll be like this, my dear chart. Okay. Now let's take a look at your entries and what we have on the 5 minute chart, alright? So the first one was, I guess, a long and a stop? Or was this short and a stop? Long, the first one, okay? So look, for open range breakouts, I'll give you one tip which I'm usually doing, and I think it will help a lot of you here. I don't wait for a candle to close and then the next candle immediately break. If I see that, I'm not taking the trade. I want to see that after the close, the next candle goes against my direction and then it goes in my favor. If it does that, 100% taking it, providing that all the other indicators are and everything else I'm looking for is also in my favor. Okay, so I need to see that. If I see that it's immediately going up, I am not taking it because I still didn't measure the power of the sellers. On each trade, you want to measure the power of the buyers and the power of the sellers. And at the open, if you have only the power of the buyers and you didn't see the power of the sellers, you need to be scared. Be really scared, right? You need to see one winning, right? You see these are pushing there, then the sellers are stepping in, and then just they are using this hammer on your head, and boom, right? So basically, make sure to check the power of both and go with the stronger, okay? Because even here, I see that the power of the sellers is bigger, right? And I want to see what's the next one. Will there be buyers or sellers? It opening on a new high is not enough. Then it's dropping down and then it's coming back up. Okay, I like that. I will take it. Will I take it to the long side in this candle? Not really. Looking at this. Because look at this. I know what happened here. It opened here. Even without looking at this. It went up. Then it dropped down. It got you stopped out. It went all the way down there. And then it closed back up. I believe this is what happened. Looking at your exit. Because when you exited, you didn't have a wick down here. Right? So basically this was happening. It opened up, took it for 1 minute open edge breakout, and then it dropped down. If you waited for that, right, you wouldn't have been in this position. Now, the next one, I'm not sure, was this long or short? I think it was a short and a stop out, right? And this is exactly what's happening right here. Stock opening here, going down. You see the power of the sellers, you don't see the buyers, and there the buyers are getting in, and you're exiting on that position, right? I guess then you are taking it to the long side. I mean, there is actually a lot here. So looking at this, remember to look also at the 5 minute chart. You see where it's just struggling right here? This is where you are taking your positions. You are taking your positions in the face of the resistance on the 5 minute chart. Remember, we want to buy low. Don't just buy the dip. Don't just buy here, assuming that this is the low. Buy low, providing that you have a setup and a support and that you are sure that there is support right there. And then sell closer to the resistance. Don't buy at the resistance. Even the break of the resistance, don't buy it. Because the break of the resistance is a range. It could go closer to it like here. It could touch it and it could break above it and then flash down, right? You want to just make sure that the resistance is strong. Make sense? Another thing you need to have that, and you need to have technical stop losses. Really tight stop loss, really tight stop loss, really tight stop losses there, really tight stop loss there. Make sure within the range your stop loss is the low of the range. This is the easiest thing to do, low of the range, especially when if you are not sure where to put your stop loss, what's the technical level or what to do right there. The easiest thing, which will still get you consistent, is to have your stop loss at the low of the range. At the breakout, stop loss half of the range. Perfect. Now let's see what Sebastian did. So Sebastian traded NIO. 4 trades on NIO and you got 4R in total. That's good. 5 minute open range breakdown. So your first trade was a 5 minute open range break out, not down, I see. And the entry was bad, right? Closed it as it came back to the entry. Then you took it to the short side as it bounced from view up, right there, I guess. And then you took a parabolic reversal down there. And then you caught a view up reversal down there. Okay, so let's take a look at that. First entry, 5 minute open range breakout. You're having this first candle here. Second, third, fourth, fifth, sixth, 7, 8. Okay, it's still considered 5 minute open range breakout. What I would have been afraid of, you're getting into the face of resistance. The breakout area is really late. You are either entering it right here, putting your stop loss at the half of the range, or you are entering it here at the break of the pre-market level, putting your stop loss at the half of the range still. Right here, just so late, and I like that you exit because you realize the entry is late and no reason to hold on into this thing, exit at break even. I like what you did right there. Then it's dropping down, pulling back, right, and you're taking it to the short side. You're actually having a similar entry to mine. I'll show you my NIO trade right there. Then it's dropping down. This is a parabolic drop, right guys? If you draw the line, this is a parabolic drop. Ideally it will be like this. We don't want to see that pullback, but unfortunately it's like this. You can do nothing. It can't be perfect every time, right? Taking it on a new 1 minute high, partialing all the way up. Now you're having a double bottom at the low of the day, starting to have higher low waves, having a range, breaking the range, taking it to the long side for a view up reversal. On the 5 minute chart, you're having a double bottom at a level, having a new 5 minute high. This is sort of 4-bar play, not an ideal 4-bar play, but it is a 4-bar play. Could you see it, guys? Type me one if you can see it. I know you can see it, come on. Perfect. That's it. Red, green, breaking the range, that's the entry, right? And that's it. Perfect. So let me show you how I manage that NIO trade. Okay. That's NIO, and this is where I took it to the short side. Why did I take it to the short side right here? Someone told me that they don't understand my entry. Why did I take it to the short side here? Just one general answer. Why did I short it there? Anyone, guys? A hint is here and a hint is here. Exactly, Valerio. Reverse ABCD pattern with a pre-market resistance, right? Daily chart is weak. It gapped down. And I usually go for trends on with the direction of the gap. Stock gap down, I'll take it for a trend to the downside. Stock gapped up, I will take it to the trend to the long side. Doesn't mean that I will not play to the opposite direction. I will play to the opposite direction, but not for a trend. Not as long as it's below all the moving averages. The moment it goes above them all, I will start looking for a trend to the opposite direction. And the pre-market is dropping down. It's making 1, 2, 3 candles to the upper side, making an engulfing candle on the 5 minute chart, new 5 minute low, new 5 minute low, taking it to the short side. What was my stop loss? Could anyone guess my stop loss here? Anyone? Knowing my style, what's my stop loss? That's it. It's here. Up here. So wide, right? So big. Why would I have this as my stop loss? Because we are within the range. we are sitting within a range. I could see that we are forming a range here, and I'm taking it to the short side, and I know that my entry is not the ideal right there, but I know if it will go in my favor, I will be able to add. If a stock is trending, it will always make pullback. Stock will not just flash down. If it flashes down, it's okay. I mean, my entry is there, I will get my 2-to-1 down there. If it doesn't flash down, and that's what usually happens, it will always give you a pullback. I could add and add and add. So I'm entering here and I'm having my stop loss right there. I didn't have it right here. I could have done that because it's a new 5-minute high and it's not that bad, but the 5-minute candle wasn't still closed. Since the candle is not closed, it could go up and then go down. I don't want to get just stopped out to the wick. Now, we are having a reverse ABCD pattern or a bear flag, whatever you are seeing right there, or a reverse ABCD pattern right there. And the most important thing, we are having a pullback. Remember, I know my entry is bad, so I'm entering in on a pullback. And now we broke that range. Since we broke that range, I could have my stop loss at the half of the range, right? Half of the range or somewhere up there, and that was my stop loss. My stop loss was at 80. It wasn't like exactly half of the range. What are we having after that? We're forming a new range. We're breaking the range. I'm taking it to the short side. One more time, we're basically adding to my position and then partial. And I added a couple of times to my trade because, as I told you, when I go short with the gap, I go for a trend. I took it to the short side, added to my position to the short side, stop loss closer to that entry point, or the average was there. Like my average was at the beginning somewhere around there. Because of those two adds, my average became down here and I exited at break even. Am I interested in a long trend right now? Yes, because now we're above all the moving averages. Unfortunately, we're still below the high of the day, but an entry at right there wouldn't have been bad to the long side. Even right here. Why is that? Because you see that the point is holding. Sorry, the support area is holding. Like, not bad to try it to the long side. So yeah, that's it. Let's see. Denise. I mean, on my trade, when you said don't buy the dip because it should be range. No, I mean, you could buy the dip, but make sure when you're buying the dip, you are buying for a reason. For example, imagine if you are buying here and then it's dropping. Then you are buying here because you are assuming that this is the dip and then it's dropping. Then you are buying here and finally it's working. Then you're buying here, it's dropping. You're buying here, you're buying here. You can't just buy the dip assuming this is the dip. In fact, you don't know if it's a dip yet. When you're looking at it live, this will be your dips. This will be your dip. This. And you don't know what's the dip. So you need to buy as close as possible to the support when you are having a resistance or low. Let me actually download this. Just give me 1 second. Save. Okay. And let me open it and let's just reverse this thing. Let's give your head blowout. Okay. Oh, that's ugly, right, guys? Anyway, that's good. Let's just assume that. Oh, this is a mirror, actually. We'll have to trade this way, guys. Anyway, just to tell that. Right here, you're having the moving averages. You're having a lot of support down here. You see that there is a downtrend to the opposite way. If we can trade this way, guys, it will be crazy. Okay, you see a downtrend, an uptrend somewhere going right there, like that. So if you buy those dips, that's good because you're going with the trend and you're going again with the support areas. Okay, my eyes are feeling way better right now. Right here, you can't buy those dips. You are going against the trend. There is nothing below you, no support area, all the resistance is ahead of you, so no reason to do that. Now let's see what you did here on WKHS. Amazing entry. You're going with the trend. Look at these guys. He is having the 30-minute chart, 15-minute chart, 5-minute chart, and 1-minute chart, right? You see that all the time frames are showing you the same direction, and he took it to the short side on the way up. You see, on the way up. Some people will take it to the long side here because it's making a new 1-minute high after a hammer, but he saw that this thing is not ideal to the long side yet. It's still weak, so he is trying to catch an entry as close as possible to the resistance, add as close as possible to the resistance. Unfortunately, it didn't hold to that winner. It could have been like more bigger winner, right? But still, those two entries and two trades, they were amazing. Now let's see what else we had right there. Let's see what you traded. So no, you held on really well. I like how much you held. Yes, you exited all out without any partials, but you held on to that winner, which was good. It's a question, not a trade review, but just a question. How can I make my decision while on the 1 minute chart the price above view up, and on the 5 minute chart the price is below view up? Do you mean, for example, right? Wait, I can't really get that. You can't have a view up on a stock above view up on the 1 minute chart, but below view up on the 5 minute chart. View up is the same on all the charts, at the same level. Then you have definitely some DAS issue. Try to reinstall it or email their support or maybe live chat with them. You can't have view up on the 1 minute chart stock above view up, and on the 5 it's below view up. Does that make sense? But I mean, even looking at this, I guess this is your view up, right? This brown line. Like on the 1 it's above view up, and on the 5 it is above view up. It was a little bit below it here, and it was a little bit below it there. Let me see it. No, I mean, it's normal. Look at this. This part right here is above view up on the 1 minute chart, and this part right here is above view up. Then right here it's below view up. Right here it's below view up. It could be just 1 cent or 2 cents different on different time frames, but check your montage, guys. On montage, there is a place where you could see the exact view up price. So if it's a couple of cents wrong on the chart, on the montage it will show you. So make sure to check view up on the montage. A, C, D, you could say this an A. Okay.